Are you ready to explore financial and management accounting systems? This video outlines key techniques used by managers to enhance decision-making and control. Discover how these systems aid in planning, performance measurement, and more. Management accounting systems provide internal stakeholders with relevant information. This contrasts with financial accounting aimed at external users. Managers use these systems for decision-making, planning, and control. Financial accounting focuses on providing data to shareholders and regulatory bodies. Both systems play crucial roles in organizational success. Cost accounting tracks and analyzes production costs. It's essential for managing expenses and improving profitability. This method helps determine product pricing and overall financial health. Managers use it to make informed decisions about resource allocation. Understanding cost structures is vital for business success. Budgeting and forecasting are crucial for planning future activities. They involve projecting revenues and expenses to guide management. These processes help set financial goals and monitor progress. They enable proactive management and strategic planning. Accurate forecasts lead to better decision-making. Performance measurement tools assess business efficiency. Balanced scorecards and KPIs are common methods used. They evaluate the effectiveness of operations. Managers rely on these tools for strategic insights. Effective measurement drives continuous improvement. Decision-making tools support managerial choices. Techniques like variance analysis and break-even analysis are vital. Marginal costing helps in evaluating financial impacts. These tools provide clarity and direction. They are indispensable for effective management. Management and financial accounting serve different purposes. Management accounting is internal and future-focused. Financial accounting is external with historical data emphasis. Reporting frequency and detail levels also differ. Understanding these distinctions is key for effective application. Double-entry bookkeeping records transactions as debits and credits. It ensures the accounting equation remains balanced. This method provides a complete financial picture. It's crucial for preparing financial statements. Accurate bookkeeping is foundational for financial health. Financial statements include balance sheets and income statements. They summarize an entity's financial performance and position. External stakeholders use these reports for decision-making. Understanding these documents is essential for financial analysis. They provide insights into company health. Horizontal and vertical analysis are key techniques. Horizontal analysis compares financial data over time. Vertical analysis looks at data within a single period. These methods identify trends and performance metrics. They are crucial for financial evaluation. Variance analysis compares actual performance to budgeted figures. It identifies deviations and their causes. This method aids in corrective actions. Understanding variances is crucial for management. It helps maintain financial control. Cost accounting captures production costs for pricing and profitability. Techniques include job costing and process costing. Activity-based costing is also used. These methods provide detailed cost insights. They are essential for financial decision-making. Stakeholders have diverse needs for accounting information. Shareholders assess profitability and sustainability. Managers require data for strategic decisions. Creditors evaluate creditworthiness and risk. Understanding these needs is crucial for effective communication. Integrating financial and management accounting offers many benefits. It enhances decision-making with a holistic financial view. Improved planning and control result from accurate data integration. Performance measurement is more effective with combined insights. Transparency and accountability are also increased. Financial data establishes benchmarks and metrics. Integration allows better tracking of performance goals. Corrective actions can be implemented promptly. This leads to continuous improvement. UK Versity can achieve greater operational efficiency. A unified accounting system promotes transparency. Consistent reporting builds trust with stakeholders. It aids in compliance and accountability. Accurate reporting is crucial for maintaining credibility. Stakeholders benefit from reliable financial information. Integrated systems streamline processes. They reduce redundancy and improve efficiency. Data collected for financial reporting can serve multiple purposes. This reduces errors and duplicate entry. Cost efficiency is enhanced through integration. Consistent financial reports benefit stakeholders. Integrated systems ensure coherent information. This fosters better communication and trust. Stakeholders receive comprehensive insights. Effective communication enhances stakeholder relations. Integration enhances operational efficiency and planning. It improves stakeholder relations and strategic decisions. UK Versity can achieve long-term success with integrated systems. These benefits contribute to overall institutional growth. Integration is key for sustainable development. In conclusion, understanding financial and management accounting systems is essential for effective decision-making and organizational control. Financial accounting provides accurate reporting of a business's financial position, while management accounting offers insights that support planning, budgeting, and performance evaluation. Together, these systems ensure transparency, improve resource allocation, and help managers make informed strategic decisions. A solid understanding of both areas strengthens organizational accountability and supports long-term business success. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 074843616888.